This is a project that was started at the World Bank about 2 or 3 years ago, and we had the advantage of a very good group of senior advisors to that project who have stuck with us and commented on things as we've gone along, and Anne Kruger's here, she's one of those. That plus the fact that we had about 90 consultants doing the country case studies meant this is very much a collective project. It came out of, if you look at the long history of engagement by governments in agriculture, of course that goes back thousands of years, but in the past 50 years, if we just look at some milestones, I think the Harberler report to the GATT was one of those where it warned in the mid-50s that agricultural protectionism looked on the rise in Europe and elsewhere, and that this could be a problem for world trade. And then in 1973, the seminal book by Gail Johnson on world agriculture in disarray worried about the fact that there was both high protection to agriculture in rich countries and high taxation of agriculture, particularly at the border, for farmers in developing countries, and that in addition to that there was this tendency for governments to insulate their domestic markets from fluctuations in international markets, and that meant there was less capacity for international trade to reduce those fluctuations than would have been the case. Things got worse over the dozen or so years since that book of Gail Johnson's, and with the export subsidy war in the mid-80s, prices reached their lowest level in real terms since the Depression. So, and with that, a lot of agricultural protection rates had gone up. And meanwhile, some newly industrialising countries like Korea and economies like Taiwan's were following Japan and Eastern and Western Europe into agricultural protectionism in place of an earlier period when they were actually taxing agriculture. So there was concern that that might spread, that idea of moving towards increasing protection for agriculture might spread to other newly industrialising countries. But at the time when the Kruger-Schiff-Valdez study ended, that Anne led when she was Senior Vice President of the World Bank in the mid-80s, just after that study finished, there seemed to be this flow of reforms. Of course, it was all Anne's doing, because her book was instrumental in waking these governments up to realising they could do better with their agricultural policies and their trade policies. So we saw a lot of reform in developing countries, not all of them, but some of them, and likewise in high-income countries we saw a movement away from that very high protection of the 1986-87 period. And so the question that we returned to 20 years after the Kruger-Schiff-Valdez study was, has this set of reforms, what sort of impact has it had, and in particular, how is it impacting on farmers in low-income countries? So the sort of questions we addressed here were, to what extent has the agricultural export taxation of developing countries declined? But simultaneously in those countries, to what extent has there been an increase, if any, in agricultural protection rates for the import competing parts of their farm sectors? And what does all this add up to globally when you take into account also the high-income country policy changes? Then secondly, running that through a model, what can we say about the impacts of those changes? So we took a snapshot, we took the latest GTAP database, which is for 2004, imposed in that our own distortions that had been measured in this project for that year, and then asked retrospectively what had been the impact of coming to that level of distortions around the world compared with what the distortions were according to our database back in the early 80s, and then prospectively what could happen if we were to remove the remaining distortions as of 2004. So let me go through some of that and then some thoughts at the end about where we might go into the future. So briefly on the economic history, in the last 20 years there was a work that Hayami and I were engaged with other scholars back in the mid-80s, where we looked at Japan, Korea, Taiwan relative to the older industrialising countries of East Europe, Western Europe in particular. There was the Kruger-Schiff-Valdez study, which focused on developing countries. So our study was looking at the agricultural protection growth story. The Kruger-Chef-Valdez study was looking at the protection for manufacturing, the exchange rate distortions, both of which were negative for agriculture, as well as the direct export taxation and so on for agricultural policies in those 18 developing countries in their study. And then for the World Bank's World Development Report in '86, Rod Tyers and I did the modelling work with a simple global model of world food markets to ask what was happening to world prices as a consequence of all of those policies that were in place in the 80s. And two things came out of that. One was, yes, the rich country policies were depressing world prices for food, international prices for food, substantially in the early 80s. So we estimated about 20% depression of those prices from rich country policies, but the poor country policies were having the opposite impacts. And at least for those 7 commodity groups, they were almost exactly offsetting. So the world price was at about equilibrium levels. It's just that the internal prices were very high in rich countries and very low in poor countries. But as well, that study had a stochastic element to it, and so it looked at what impact the price insulating component of those policies was doing to international price volatility for those food products. And the results from that work suggested that the policies that were in place at that time had made international food prices 3 times as volatile as they otherwise would have been. So that's a bit of economic history. So these are the sorts of indicators that we'd like to look for to see how much the world has progressed since then. So we're looking for an anti-agricultural policy bias change in poor countries and a pro-agricultural policy bias change in rich countries. Within agriculture, we're looking to see to what extent there's been a reduction in the anti-trade stance of those policies, that is the taxing of exports and the taxing of imports. How has that changed over time? What's happened to the dispersion of these rates across industries within the agricultural sector, because the cost of a policy is the square of the tariff if it's an import restrictive policy. And so if you've got a big dispersion, you're going to have a higher welfare cost than you would have if you did not have that wide dispersion in rates of assistance within the sector. And finally, this question about insulation. We haven't got much to say about that other than show you a couple of diagrams, but we'll be doing some more statistical work on that shortly. Okay, so let me then tell you what we've learnt from estimating what we call nominal rates of assistance and consumer tax equivalents of distortions, but also some other indicators. We'll have a look at the global effects as modelled by using the linkage global economy-wide model, and then ask about some future reforms. So this project has two stages. We had this first stage focusing on individual country case studies, and we looked at about 75 countries in that and subdivided it into regions. So there are separate books coming out on that. So we've got 2 of them out, the European Transition Economies, and fresh this week is the Latin one. So you can go out and purchase those at a very modest price at the moment. In that work, we did have some IFPRI staff engaged in the process, as well as FAO, and in the case of IFPRI, it was India and Ethiopia that they covered for us. There will be 2 more of these books coming out in the new year, one on Africa, one on Asia, and a global overview book, which we just sent to the press last week. And then stage 2 is focusing on a couple of bits of analysis of these data. The database with all these estimates in it will go onto the World Bank website later this month, so you can download that and do as much econometrics as you like. But the second stage is looking at 2 questions. One is, what are the poverty and inequality consequences of remaining distortions in these markets? And so we've got a dozen or so country case studies that we're looking at there, and that set of papers are ready to be edited. And the second exercise was looking at trying to understand better the political economy forces behind these policy choices and the evolution over time. And again, there's a dozen, perhaps 15 or so papers coming out in a book there, several of which are political econometric exercises using the database to try and understand the past. Okay, so we began estimating nominal rates of assistance, a standard sort of measure, the extent to which the domestic price exceeds or is below the world price, appropriately adjusted for quality and so on. And in doing that, we covered all the major crop and livestock products. We covered about 70% of every agricultural sector's output. And of the other 30-odd%, we got our authors to guesstimate what they think the rates of distortion were to those remaining ones. It might be that a lot of them were non-traded goods that had no government intervention, so you could guess that the nominal rate for them would be 0. And then we calculated some gross subsidy equivalents in constant US dollars and did some counterpart stuff for consumer distortions. So these were the 75 countries divided by region. So we had a good African exposure, for example, 21 countries there. And these countries in total amount to 90% plus of the world economy. That was our coverage through time of the agricultural sectors there. So as you see, it's roughly 70% throughout the sample, both time-wise and across countries. And if you took the 30 major traded products, then our coverage was much higher. It was more than 3/4 of the global output of those 30 products and more than 5/6 of their share of world exports. Okay, so here's some results. This is the global nominal rates of assistance for high-income countries on the upper part and low-income or developing countries in the lower part. And as you can see, there's been this major shift for developing countries away from taxing agriculture, roughly about 25% rate of taxation back in the 70s, 60s. And then gradually since the 80s, that's risen and it's even crossed over, so that for the group as a whole, we now have positive nominal assistance to agriculture, which in this developing country category does include Korea and Taiwan, of course, which are very highly protective. And in the rich countries, we saw a rise in protection until the mid-80s when we hit that point of the agricultural export subsidy war, and thereafter the extent of decline the change has been negative, and so we've had some decline, although there's been a lot of re-instrumentation of support away from coupled towards decoupled programs, and that dotted line gives you the total if you do include those decoupled payments. So they have absorbed some of that decline, so farmers aren't as bad off as it might look from that decline there. If you look at it by region, there are the numbers. So Europe and Japan shared the first prize for being the most protected in the early 80s, but as you see, Western Europe's average has halved, Japan's has gone up 50%, so Japan looks pretty big there compared with Western Europe now. North America is half of Western Europe, Australia and New Zealand's virtually nothing now, and you can see the range there as well for those developing country regions. If you multiply that by the value of production at undistorted prices, you get the gross subsidy equivalent in dollars. Deflate it to constant dollars, and that's the distribution now and in the early 80s. And so Asia and Western Europe share now that is developing Asia and Western Europe share the largest aggregate amount of subsidy equivalents at the moment, with Japan not far behind Europe, and then North America not that far behind Japan, and the developing countries very small. This is just a subdivision of those data, and it tells you in the white bars there what the gross subsidy equivalent is for developing countries, and you can see it's negative for most of this period. That is, they were taxing their farmers on net, and that taxation increased right through until the early 80s, and then since then with the reforms we've seen that taxation decline and actually move into positive territory in the latter 1990s. Meanwhile, rich country subsidies have risen progressively over time, again up until the 90s, come down somewhat since then. But if you add the two together, you get the black line there, and that's the global average. And so that global average was close to 0 back in the early part of this period. It's since risen inexorably, and if you include decoupled payments, it's risen even in that most recent period. We don't have 05, 07 numbers for developing countries, enough anyway for the sample, so it stops in 04. Those subsidy equivalents, if you convert them per farmer, are pretty big numbers for the rich countries. If you include decoupled, you're looking at $13,500 per farmer, massive transfers to those guys compared with close to nothing in developing countries. If you look back to 80, 84, you can see that developing country farmers were being taxed $140. That's a lot of money. There's about 600 million people live on less than $1 a day, or $360 a year, and $140 was being taken away from those farmers back in that period. In terms of consumer taxes, there was a bit of a transfer to consumers here, $22 per capita in the developing countries back in the 80s. That's gone away to being a tax on them now. But the tax for rich country people is almost nothing, isn't it? $100, $95 per capita, of course, is unnoticeable to rich country people, and of course that means there's no opposition to these policies from consumers. In the developing countries, and this was a very important part of what we were aiming to do, was to differentiate the average for these regions by exportables versus import competing products. And that's the split you see here. The lower line there is the export tax equivalent that was in place in these developing countries. So about half the value of products was being taken away from farmers through implicit or explicit taxes back in the period up to the 80s. And thereafter, those taxes started to getting phased out and have now gone to virtually zero on average. Although, of course, even in that last period, 2000-2004, Argentina is taxing its farmers' exports, and more recently, of course, this last year or so, we've seen a number of other countries tax their exports as part of a response to the food price hike. On the upper part of the story, the diagram here is the import protection that is in place. And what's striking about that is that these countries were protecting their farmers right back when, at the beginning of this 50-year period, and that has increased steadily over this period. So there is agricultural protection growth going on simultaneously at the same time as there is a reduction in the overall distortion to agriculture. So you have to think about those two things separately, so that developing countries are not intervening, they're just intervening in different ways through time, and on average they're getting rid of export taxes and they're adding import taxes. You can't explain this in terms of, well, it all depends on the budget. If the budget requires some extra taxes, then you tax trade, because that's not the case here. As these countries are getting out of export taxation, they're simultaneously getting into import taxation. For rich countries, that's the story. Again, the export products are subsidised relatively little, but they grew, of course, in the 80s with that set of export subsidies that rose then. But they've mostly diminished now, and they'll hopefully diminish entirely if the WTO eventually outlaws them. But meanwhile, you've had this protection growth here as well, at least up to the 1990s in the rich countries. The dotted line there is the average of those two. So if you put the two import competing lines on the same graph, this is the developing countries versus the high-income countries' import protection, and what's clear is that they're increasing at about the same rate. So agricultural protection is alive, protection growth is alive and well in both sets of countries, it would seem from this, even though in the rich countries it has come down somewhat and will have come down a bit more in 2008, but that's presumably temporary, and we'll see what happens after this bubble bursts. That's the nominal rates. Much more important, though, I think, is the relative rates, and the Kruger-Schiff-Valdez study emphasised that a lot. They found that in their study, which was roughly the period 60 to 84, that it was the non-agricultural policies, overvalued exchange rates, manufacturing protection and so on, that were harming farmers more than the agricultural policies themselves. So that's sort of the Lerner symmetry theorem issue. If it's a tax on imports, that's equivalent to a tax on exports in a country. So we wanted to pick up on that, and we just measured this very simple relative rate of assistance indicator, which is just taking account of the assistance to the tradeables part of agriculture relative to the assistance to the tradeables part of non-agriculture. The rich country story doesn't make much difference because most of the story is in agriculture. There's very low tariffs and so on in the non-agricultural part of the economy, and so the dotted line there is not much different from the black line above it, which are the nominal and the relative rates of assistance to agriculture. But there is a big difference across countries, of course, amongst the rich country group, and Australia and New Zealand on the bottom there has actually had negative assistance to agriculture in relative terms that gradually disappeared over these 50 years. But there's a big difference, obviously, across countries here, which is, of course, inefficient from a global point of view to be having resources not well shared across countries. This is the story for developing countries, and it's a pretty dramatic story. And it's not dissimilar to the story that we saw in Krugerschiff-Valdez, which is the first half of this period roughly, which was that the decline in manufacturing protection was very important in improving incentives for agriculture, as was the decline in agricultural taxation. So the two things together give you the dotted line at the bottom there, which is the relative rate of assistance, which is suggesting that at the time of the beginning of this period, or actually 65 starting here, farmers were in relative terms getting less than half the price they would receive if there was free trade in both farm and non-farm products. And that 50% relative taxation rate has gone to zero. In fact, it's gone slightly positive over this period. So it's a pretty dramatic part of world history to have this degree of change in incentives over just that small number of decades. If you split it by regions, it's Asia that has grown most in its relative rate, that it got rid of this large negative, minus 60 it started at back then, and it's gone to basically zero, whereas the change has been least for Africa, slightly upwards, but not as much as one would hope.